All right, well, welcome back, everyone. This is Scott Thompson, Senior Manager with Schwab Coaching. We're going to look at 3 different ways to trade a bullish bounce, 3 potential entry signals associated with what we call a bullish bounce in the trend. Now, a bullish bounce is simply a close above the high of the low day. We abbreviate that with hold, close above high of low day. I have an arrow here drawn on a few examples where the stock is closed above the high of the low day, and that may or may not be the entry signal. So there's 3 potential ways to trade these entry signals on a bounce. Let's take a look at those. Now, an entry signal is what traders use to initiate that new trade. And with a bullish bounce, there's 3 ways to do that. You can anticipate the bounce, you can trade the bounce as it happens, or you can wait for that confirmation. So, and you'll want to practice these in your paper money and then decide which one works best for you. But traders will do all 3 of these different ones, and they have advantages and disadvantages. Let's take a look first at anticipate it. So on an uptrending stock, when the stock's made a new high and it starts to pull back, the more aggressive anticipated bounce traders will look for the stock to give a bullish candle pattern near a support level. And that might be a gap, it might be a moving average, something like that. But if I move the chart forward, you can see here we had a bullish Harami candle pattern, and those more aggressive traders might look at that and say, well, I think the trend was going to stay intact. I think this support level is going to hold. And they might buy that at the end of the day. About 302 is where that stock closed that day. Now, the advantage, of course, is if the stock does gap up or goes up tomorrow, they'll already be in profit. The disadvantage is we don't know what's going to happen. That might fall again tomorrow, might go down for 3 or 4 more days. We just don't know. So those traders that are a little less aggressive might look and say, well, I can see the bullish candle pattern, I can see the support level, but I'm going to wait for it to start trading above the high of the low day. The high of this low day is at 303.01. And so they might say to themselves, hey, if it goes above 303.01 by some amount, maybe it's 50 cents, maybe it's $1, and then they'll get into the trade during the day, again, hoping for that bullish move off of support. If we move the chart forward a day, in this case, you can see the stock traded above the high of the low day and then closed at 305 or 20. And so they'll be in the trade at the end of the day. They already have a little bit of profit. What's the disadvantage? Well, it could have traded above that and then slammed back down, and they'd be losing money at the end of the day. Those more conservative traders might look at this and say, well, I'm going to wait for confirmation. There toward the end of the day, if it's still trading above the high of the low day, then I would look to get in after, maybe 30 minutes left in the market day just to confirm that close. So those are the 3 different ways to trade the bullish bounce. Of course, you hope the stock continues to go up like this one did. Now, make sure you go and practice. Look for stocks making higher highs. Look for your entry signal, and have a great day.